Good morning. You're watching All You Need to Know on BloombergQuint Live, and I'm Alex Matthew. First, the headlines. The risk-off sentiment sparked by geopolitical tensions between the US and Iran is seemingly ebbing, with Asian markets opening with gains. The Reserve Bank of India enables round-the-clock trading of the rupee in a bid to curb offshore trading. The currency on a Monday ended at a two-month low owing to geopolitical tensions. The RBI also imposes threshold limits for asset quality, capital adequacy and profitability of urban cooperative banks in a bid to manage stress in the sector. Kerala-based EASF Small Finance Bank has filed its draft papers with the market regulator SEBI for its 976 crore initial public offer. And the Election Commission announces polling dates for Delhi and the NCR. Polling will take place on the 8th of February, that's just a month from now, while counting will take place on the 11th. Let's talk about the US markets now. They shrugged off geopolitical tensions between the US and Iran to stage their biggest intraday rebound since October last year. The indices, which were down over 1% at the lowest point of the day, rebounded to end with gains. The S&P 500, in fact, was up for the third time in 4 sessions. Renita Young of Bloomberg News wraps up all of Monday's Wall Street action in this report.
U.S. stocks ended higher on Monday after a mixed session in which investors tried to assess the economic impact of rising Middle Eastern tensions. This also effectively halted the risk-off rally that started in stocks on Friday. During the session, we saw gold higher. It touched its highest in about 6 years. However, it gave back some of those gains, still ending up a little bit, though. And we saw oil, WTI, a little bit higher during the session earlier, but it closed out lower. And during Friday's session, we'll see the U.S. monthly employment report, and we'll get a more rounded out picture of the U.S. economy. Meanwhile, we saw quite a few movers in companies' new Smile Direct Club was higher. It rose higher than 20% during the session. This is after announcing an exclusive deal with Walmart to sell its oral care products. And Cal-Maine Foods, this is a fresh egg provider. It trimmed its losses, and however, it did end a little bit higher on the day. That's a look at your Wall Street action on Monday. In New York, I'm Renita Young for Bloomberg News.
All right, let's take a look at the Asia-Pacific region now. I'm joined live by Rosalind Chin, who's joining us from the Bloomberg studios in Hong Kong. Good morning, Rosalind. Seemingly some of that crazy, risk-off sentiment is now ebbing a little bit, and there seems to be a bit of a bounce back in some of those markets. So what's the closer look telling you?
You're right. Asian markets here do seem to be taking a few cues from Wall Street overnight, and we're seeing a lot more green on the boards this morning. All the major markets, in fact, in the green at this point in the session. A little bit more calm coming back onto the markets, perhaps after the initial reaction from those ratcheting up of geopolitical tensions in the Middle East. Now, I think investors starting looking a bit more towards trade issues. For example, the US-China Phase 1 trade agreement, which is slated to be signed next week, and of course, economic data that may be coming out later in the week. For example, we've got China inflation figures due as well. Also, we've had some global PMI numbers pointing to a little bit more positivity in the markets there. We're also seeing that a little bit more support there, and for the December numbers looking better than expected for global PMI. So we're seeing the MSCI Asia Pacific Index now making gains of more than 0.7%. The Nikkei and Topix both making pretty strong gains right now. Nikkei up by more than 1%. The Topix up by 1.2%. We have had some word from Nissan. Now, of course, we've seen that Carlos Ghosn is expected to be making a press conference sometime this week, perhaps tomorrow. Nissan has said it will continue to pursue legal action against its former CEO, the auto executive Carlos Ghosn. Meanwhile, Fox Business has reported that Ghosn has evidence, he says, that proves his arrest was a plot to take him down because he wanted to merge Nissan and Renault. The details of this gripping saga, of course, which continues to unfold, will, of course, be giving us a lot more information over the coming days as Carlos Ghosn actually speaks to the press. Nissan Motor right now is making gains of about 1.7%. In Korea, we've seen the Kospi making gains of just about just under 1% right now. Looking ahead to Samsung, it's got preliminary fourth quarter numbers out tomorrow on Wednesday. Analysts are expecting a fifth year-on-year profit decline. So that's one to watch out for right now. Samsung Electronics, though, is making gains of about 1% at this moment in time, perhaps buoyed by the positivity in the trade sentiment. China and Hong Kong just opened for trade a few moments ago. Hang Seng is up about 0.4%. Shanghai Composite opened higher by about, now it's up about a fifth of 1%. Australia's S&P ASX 200 also in the green, up by more than 1% at this point in the session. But gold miners weren't doing too well there against this market of gains. The gold miners were among the losers as gold futures, of course, took a little bit of a hit as investors back out of havens a little bit. So Northern Star, Santa Barbara and also Evolution Mining among those who are losing right now. Northern Star down by more than 3.5% right now. Gold futures, of course, a little lower. The price is at $1,562.55 an ounce. Back to you.
Thanks so much for that, Rosalind. Now, the flashpoint that caused this risk-off sentiment that we were speaking about just a short while back is effectively the rising tension between the US and Iran. Listen in to what market experts are saying with regard to how that is influencing markets and what the outlook is going forward.
Is this going to be a one-off event?
We don't know is what the response is going to be.
Risk is toward further and significant escalation.
The market is going to follow the fundamentals of the economy.
The market are coming down more towards effective deterrence.
Has this materially impacted that?
Markets have been very confident.
Oil is obviously the most vulnerable asset class.
Oil to be higher.
And the second asset class I'm looking at is the bond market.
The bond market has been pretty resilient.
Weakness here may represent a buying opportunity.
Yeah, we'll watch it for relative value opportunities.
Investors have had to navigate this.
You don't change your positioning based on a headline.
Be constructive in the short term.
Volatility in the near term should be well supported.
Over the medium term, you have a whole host of uncertainties.
There's a lot of uncertainties from here.
Right now, pause and get more information.
All right, so wait and watch is what a lot of people are advocating. For now, let's turn to another piece of information. There are two asset classes that saw a surge in yesterday's trading session, which were oil and gold. While gold touched its highest level since 2013, oil prices too were at a multi-month high. The question is, how much further will they rise? Sophie Kamruddin has this report.
First, a look at oil markets. We have prices retracing some of the events that we saw on Monday, but staying elevated after jumping more than 5% since last week's U.S. airstrike on Baghdad. Brent staying above $68 a barrel. But Goldman saying that the price risk skewed to the downside unless there is a major supply disruption, which Asian oil buyers are closely watching, given that the threat could expand beyond Saudi to Iraq, Kuwait, and UAE, which make up about 68% of total OPEC production. Yet even if tensions do escalate, Goldman expects that bullion will prove the better hedge than oil. UBS and JP Morgan also seeing more room to run for gold at 1,600 or higher, but ABN AMRO in the camp that will see gold prices stalling as liquidity returns from the holidays. And as you can see on the chart right here, the rally for gold looking overdone with the 14-day RSI approaching the most overbought levels since 1999. This after gold hit a 2013 high and we had futures closing a 9-day winning streak. But the options market anticipating more gains for gold as volatility for bullion jumped to the highest level since mid-October.
Just a quick update on oil. It's fallen once again below the $70 per barrel mark, which it breached briefly. It's now trading just around 68.56, perhaps because investors are factoring the fact that the Strait of Hormuz hasn't gotten affected. In fact, supplies have not gotten disrupted just yet. But let's turn to what's making headlines across the globe. Ritika Gupta of Bloomberg News brings you the first word headlines.
Thousands of people packed Tehran and other Iranian cities to mourn the killing of top General Qasem Soleimani by the U.S. military. Ayatollah Ali Khamenei led the service, repeating that the general's death would be avenged. Soleimani was killed in Baghdad. The U.S. says it currently has no plan to pull troops out of Iraq and that the Iraqi people still want a U.S. presence in the country. China has toughened its stance on the U.S. over the killing of General Soleimani, criticizing the use of force and unilateral military action. Beijing's ambassador to the United Nations called for maximum restraint and dialogue to ensure security in the Middle East.
it's obvious that the unilateral risk-taking military actions of the United States violated basic norms of international relations.
Former auto mogul Carlos Ghosn is said to be ready to name the people he believes are behind his arrest and year-long detention. Fox Business Network says it spoke to the former Nissan boss at the weekend, and Ghosn revealed he has evidence that prove his arrest was a plot to destroy him. He added that the decision to deny any contact with his wife, Carol, was the reason he planned his dramatic escape from Japan. Harvey Weinstein has been charged with additional sexual assault crimes by state prosecutors in California, just as his trial for rape and sexual assault opens in New York. The charges come 2 years after he was first arrested and relate to alleged assaults on 2 women in 2013. Weinstein denies wrongdoing and says any sexual activity was consensual. His accusers include actors Rosanna Arquette and Rose McGowan. Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Sheen Oliver of AMP Capital believes that geopolitical issues will play a major role in determining the direction of equity markets this year. In an interview with Bloomberg Television, Oliver also explains why he thinks oil prices currently are not a threat to global growth. Listen in.
This year it's a bit unclear because on the one hand, President Trump wants to get re-elected. That, I think, is why a big explanation as to why he's dialed down the trade war with China. So I would have thought he wanted to dial down Middle East risk as well. And you could argue that after the attack on Saudi facilities in September, he was doing just that. His failure to retaliate, his desire to sort of stand pat and not do anything, I think gave the impression he wanted to keep Middle East risk as low as possible. Of course, this reverses all of that. We've made progress on the trade war issue, so that's receded a little bit, but it seems now to have been replaced by Iranian risk. That's obviously started the year on a messy note for markets. That said, I would say 2 things here. Firstly, this looks to me like it could go further. It's going to likely cause more volatility in markets. We don't know the retaliation that the Iranians will come up with, but I'm sure they'll probably do something. That said, and this is the second point, we've seen lots of flare-ups out of the Middle East. Markets get very concerned. It causes a bout of volatility. Oil price spikes higher, and then a month or 2 later, it all settles back down again. So that would be my base case. Yes, more volatility. This could go further, but at this stage, I'd be inclined to the view that it's not going to lead to a major escalation. And at the end of the day, I think President Trump does want to keep the oil price down such that it keeps the gasoline price down in the US and doesn't cause a backlash amongst his base.
Does this change anything when it comes to your assumptions for this year, your allocations for this year?
Not at this point. Obviously, in a tactical sense, you could argue share markets had a great year through last year. The US share market up, 29% on the S&P 500. Other markets up to greater or lesser degrees. China up a lot more. Now, of course, that left markets overvalued and due for a correction. And maybe this is it. Maybe we started the year going through that little correction or little consolidation. But the broader picture, I think, this year remains reasonably positive. It looks to me like global growth indicators are starting to bottom out. Monetary easing looks to have got some traction. Therefore, I think we'll see some uplift in global growth as we go through the course of this year. That combined with still very easy monetary conditions, very low bond yields, suggests share markets still have more upside. Nowhere near as strong as they were last year. I think it's more likely high single digits this year. But it's still a year, I think, where we can see reasonable gains in investment markets.
Shane, it's Kathleen Hayes in New York. Happy New Year to get started. And what an interesting new year it is turning out to be already. I want to be very specific about something you just said. The fact that, I would have thought that Trump wanted to keep the oil price low. Now, so many people throw out that, hey, there's a lot of shale gas and oil coming out of the U.S. now, and that the U.S. is much more insulated than it used to be. Number one, do you agree with that? And number two, does it possibly show that Trump is not playing this like a re-election game? He's playing it as a game where Iran has taken more aggressive steps, the people outside the embassy, the contractor that get killed, and taking the step that his own generals put on the table but thought he'd never take?
That's right. I think that step has been put on the table in relation to previous presidents, and they haven't gone down that path. Of course, Trump has. You could argue here he wants to stand tough. He doesn't want to seem to be backing down. He could argue in his own mind, he could be thinking, yes, we now produce a lot more of our own fuel. This is the US, and therefore the impact on America is less than would have been the case, say, going back 5-10 years ago. And so that makes him emboldened to some degree. The flip side, though, is that US oil prices still operate in a global market. We saw on Friday or Thursday evening US time, when the news broke of this drone strike, we saw a $2 a barrel spike in the US West Texas price and also the Brent price. So it's not immune to what goes on globally. And obviously, if the world oil price goes up, the US market is part of that, and that will affect US consumers. We will see an increase in the gasoline price in the US. So I think to a degree, America does have some immunity. It's not as dependent on global oil supplies as has been in the past. You're not going to see the sort of queuing we saw back in the 1970s that contributed to the severity of the 74 recession at that time, 73-74 recession. But by the same token, if this situation in the Middle East continues, if there is a severe disruption to oil supplies on a lasting basis, then the gasoline price in the US will go up, and at some point in time his supporters will start to wonder what's going on, why we're getting ourselves involved in another Middle East war, just like other presidents have. This one's no different, and here we are paying more to fill our pickups up.
Right, let's take a look at how India is setting up for trade. Agam Vakil is joining me to tell you all about that and what's happening in the futures and options space. Agam, for the Nifty yesterday, 230 points off, breaching that 12,000 mark.
Yeah.
And then signs today are positive across the board, so there could be a clawing back of some of those levels.
Yes, absolutely, Alex. And even a bout of short covering is very much on the cards, especially given the kind of selling pressure that we did see yesterday. Does it come today? The SGX Nifty futures are seeming to, well, reflect that. There's a possibility that we may have a positive start in today's day of trade. But moving on to how things panned out yesterday, we had a sharp drop on all the major indices, which includes the Nifty, the small cap and the mid cap indices, the banking indices as well, all coming off by quite a bit in yesterday's day of trade. But you know, how are ADRs right now? And is there any recovery? Well, not really. There's no indication of that, at least as far as some of these counters are concerned. As you can see, we are looking at weakness, except for something like a Wipro, which advanced by around 1.5%. But in terms of fund flows, we saw very little activity in terms of FIs and DIYs on a net basis. As you can see, numbers of well, less than 104 crores net outgo. It doesn't really tell us anything at all yet. But let's move on and talk about contributors. We, in fact, didn't have more than one company advance by more than 1%. That was, of course, Titan on account of its quarterly update. But we did see a lot of losses coming in across the board, considering about nearly 50% of the losses were borne by, well, the 46 other companies on the Nifty 50, save for Reliance Industries, HDFC Bank, HDFC and ICICI Bank. But moving on to futures and options, how are things stacking up there? There certainly was a lot of shorts building into the system. Volumes were high in futures too, about 14% added in open interest as far as Nifty was concerned. The Bank Nifty futures looking at a 19% increase in open interest. Has this led to a change in open interest in terms of your levels? What are we watching out for? 12,000, 12,500 are the ones with maximum open interest, but I'm more interested in the change in OI, so let's bring that up. There you have it. We have seen more writing around the 12,200, 12,300 calls, and that is very evident in the kind of selling pressure that we did see yesterday. Let's move on and talk about the other factors that are playing out here. Naturally, the VIX went up by around 16%, nearing the mark of 15. Some may say that it's still relatively low, but we must remember that the VIX is coming off the back of around the levels of around 10. So from there, we've seen a 40% rise over 40% rise for now. The put call ratio currently at around 1.1 on expected lines coming off. And in terms of stocks, let's talk about some of those counters which did see a lot of traction there. So we did see HPCL, there was a lot of weakness there, along with Canara Bank, well, a lot of shorts coming in. Mindtree, of course, one of those odd counters which actually did do well. In fact, the IT industry did do well yesterday. And in terms of stocks which saw unwinding very quickly, we have Torrent Pharma, SRF and Tata Steel. So, well, Alex, it does seem like there could be some short covering in store. But to what extent and whether or not the markets can hold on to those gains, even if there is short covering, that's something that we're going to have to wait and watch.
Absolutely. Thanks so much for that, Agam. All right, now, geopolitical tensions not only impacted the equity markets, they also hit the currency. The rupee weakened by another 13 paise to end at 71.93 against the US dollar. And this was the lowest close for the currency since the 14th of November last year. It was also the third straight day of losses for the currency. It recovered from an intraday low of 72.11 against the greenback, and traders are now anticipating further weakness in the currency owing to the uncertain global cues. Of course, later in the month you will also, or rather at the end of the month on the 1st of Feb, you'll have the presentation of the Union budget, where the fiscal deficit number will be keenly watched by investors. Let's turn now to Soumit Sarkar, who's joined me to tell you all about the stocks in news. Good morning, Soumit. What do you have on your list today?
Good morning, Alex. I'll start off with the earnings that have been announced yesterday. First, the only earnings that came out yesterday was ITI. The revenues were up 47%. The net profit jumped nearly 12 times. The company reported an EBITDA gain of 65 crore rupees as against an EBITDA loss of 19 crore rupees reported by the company last year. Now, other income that was up 2 times on the back of government grants and the write back of liabilities. Now, auditors have given a modified opinion on the earnings of the company on the back of the write back of liabilities worth nearly 19.3 crore rupees, which is due from a public sector company. HDFC Bank, because they came out with their quarterly updates, now they're saying that in Q3 update shows strong growth in loans and deposit. Advances were up nearly 20%, deposits increased by nearly 25%. The CASA ratio was at 39.5 times versus 40.7 times last year and versus 39.3 times last quarter. Now the bank is continuing to gain market share at an accelerated pace. PI Industries, because the factory accident happened at one section of a multi-product plant in Gujarat. Now other operations of other multi-product plants have not been affected at the site, says the company. Now, according to a BNK brokerage, the Jambusa facility is one of the key units for exports, and therefore the news is negative for PI Industries. Saga Cements, because they have come out with the December update, they're saying that the December sales were down nearly 4% compared to last year at close to 312,000 units. VST tillers or power tillers sales were up nearly 4% compared to last year, while the tractor sales were down nearly 39% compared to last year. Aster DM Healthcare, because the company will be considering share buyback on January 9th, and Reliance Home Finance, because they have said that the total amount of default from loans from financial institutions stood at close to 982 crore rupees as on December 31st, and the total financial debt of the company was close to 12,000 crore rupees.
All right, thanks so much for that, Soumit. You'll find all of those stocks, if you missed any, on the website BloombergQuint.com. There's a story that compiles all the stocks that Soumit just spoke about. There are also several other stories that you should consider reading. First up, the Reserve Bank of India has enabled local banks to offer round-the-clock trading in the Indian rupee as a step towards reducing the rising influence of offshore trading in the currency markets. While the RBI's decision enables extended trading in the over-the-counter market, the capital market regulator would need to issue separate instructions for round-the-clock rupee trading on exchanges. Now, the Reserve Bank of India has also tightened its supervisory action framework to better manage stressed urban cooperative banks. The new guidelines include threshold limits for asset quality, profitability, and capital adequacy to determine whether a commercial bank should be put under a corrective active framework that is similar to the one imposed on scheduled commercial banks. The revised supervisory framework is the third recent circular aimed at improving the functioning of cooperative banks and is a response to the Punjab and Maharashtra cooperative bank fiasco. All right. Well, that's all you need to know going into trade today. Do stay tuned. There's clearly lots to talk about, and you'll find all of that on BloombergQuint.